you open your browser, type in Slido, and then you can enter the event code. Our event code is U800. Once you can put it in, and then you'll be able to send in your questions and also be able to vote for the questions that you want the speakers, the panelists to answer. So you can try it right now on your phone. You can get in, you go to Slido. If we can go back to the first slide. Yeah, just open your web browser, type in slido.com, and then you'll be required to enter the event code, and then our event code is U800. Through that, you'll be able to send in your questions, and also the speakers will be able to answer many of the questions. So we'll be starting shortly. For those that are still out there, we'll encourage you to come in, and then we'll be starting shortly. Thank you. Can you Slido? Code is U800. Honorable Governor of the National Bank of Rwanda, Honorable Deputy Governor of the National Bank of Rwanda, Honorable members of the Senate, members of the Parliament present, Governor of the Southern Province, heads of banks, development partners, distinguished ladies and gentlemen, all protocol observed, good morning. You're welcome to the Monetary Policy and Financial Stability Statement of 2020. This morning, as per our agenda for those that have it right in front of you, we'll start with the presentation of the Honorable Governor of the National Bank of Rwanda, followed by a Q&A session with the audience. And for the media in the room, I would like to tell you that we have a press conference soon after the presentation this morning. Distinguished guests, in today's presentation, the Governor will talk about key economic and financial developments, monetary policy, monetary performance, and convey the bank's perspective on the overall economic outlook of the country. If you wish to interact with us, our official hashtag is MPFSS 2020 for those that are on Twitter, Facebook, and also Instagram. I know that many of you are young and you know Instagram, you have Instagram. You'll also be able to download the documents that you have right in front of you in a soft copy on our website, which will be uploaded shortly. And during our Q&A session, we'll be able to use our Slido app, where you'll be able to send in your questions and be able to interact with different audiences that we have present this morning, and you'll be able to send in some of your questions. One important announcement is the Rwanda Development Board. Sorry about that. The Rwanda Development Board wishes to inform you that the CEO Forum on the financial sector, scheduled to take place tomorrow, has been postponed to a later date. The postponement is due to unforeseen and avoidable circumstances. A new date will be communicated soon. Ladies and gentlemen, may you allow me to invite the Honorable Governor of the National Bank of Rwanda for his presentation. Welcome, Governor.
Thank you, Bob. Fellow members of Parliament here present, CEOs of financial institutions and other private sector institutions, government officials, all protocols observed, good morning. Thank you again for accepting our invitation. As usual, we present to you the Monetary Policy and Financial Stability Statement in February, looking at the performance of the economy for the last year and the outlook for the current year. So we'll be looking at the performance of the economy in 2019 and the outlook for 2020. So the presentation is divided into three parts. We normally look at the global context we are working in and then focus on the domestic economy and the financial stability as one of our main mandates. Then we'll end the presentation with the outlook. Starting with the global economy, as you see on the graph, we expect that 2020 is going to be a better year than 2019. 2019 performance was much lower than the previous years, and this was mainly driven by the war or trade war between the US and China, but we also had geopolitical challenges in different parts of the world, and this affected the global demand and the global economic performance in general. So with the signing of today we know the US and China almost agreeing on trade terms, and we expect the trade war to be ending this year. So that was the basis of the new projections for 2020 to be better than last year. But as we see, there are challenges that might challenge this projection that we had. And this is a projection from the IMF given towards the end of last year. The other, of course, as a central bank, you would understand, we're concerned with the global inflation, and that also impacts on our inflation. And as we see this year, is expected to slightly increase compared to what we had last year of 3.4. This year expected to be at 3.6%. Again, the reduction in last year's inflation was linked to the general reduction in global demand. As we know, we had reduction in commodity prices, and so that's really impacted the inflation that went down 3.4 from 3.6 in 2018, so that is expected to rebound this year. And we expect the major central banks to remain accommodative in their monetary policies because we still have challenges in the global economy in general. So we'll come back to the outlook and what we see are the challenges on the global economy that could also impact our domestic economy. Now, going on the domestic economy, I will want to again present this in three parts. One, we'll look at the economic performance in general, that's the real sector. Then we look at the external trade that impacts on our economy, but also on our business and mandate as a central bank. And the last part will be focusing on the monetary sector that is really our main mandate and our main focus as a central bank. So as announced by the Institute of Statistics and the Ministry of Finance, 2019 has been a very good year for the economic performance in Rwanda, with the first 3 quarters registering 10.9% growth. And this was mainly driven by construction, which grew by, let me start by industry. The industry, where construction is part of industry, so industry grew by 17.7%, though it's a smaller subsector or sector of the economy, but it had really good impact on the growth of the economy itself. And within industry, construction grew by 30.5%, and this construction had a spillovers in manufacturing that grew by 12.5%. So manufacturing with linked to construction had higher growth last year, and this in general. Plus, it also had the good performance in construction, had spillovers in services, and that also, especially in transport. The continued increase in conference tourism had a good impact on services. So you have the details in the booklet. I won't go into the detailed growth per sector or subsector, but at least what the story here we show is we had good performance mainly driven by industry and services, because the biggest chunk of the economy, almost 50%, the growth of 10.6% had also a very positive impact. And when you look at what we track as the central bank, the frequent economic indicators, which normally go in line with the overall real economic performance by the end of the day. So the two graphs, one above shows what we track, the composite index of economic activities, that is frequent economic indicators. And the lower line shows the real economic GDP growth that is normally announced by the Institute of Statistics. When you look at the fourth quarter, the CIA is growing by 9.9%, and this gives us confidence that though we haven't received the final numbers from Institute of Statistics for the fourth quarter, we also expect it to register good performance. So that's why we can confidently say that we expect overall growth for 2019 to be double digit, or if not hitting above 10, to be really slightly below 10. But what we are sure of is to be above the 8.5% that we had projected earlier. So this is the story on the overall economic performance, good performance in the industry, and good performance in the services that drove the overall growth of the economy. Now, on the external sector, I think we have three stories here, messages here that's a bit mixed. The main one that you see on top is that trade balance, or the trade deficit, increased in the last year, 2019. It increased by 16.3%. This is mainly because we had imports growing by 10.6% and exports growing by 3.8%. And imports are growing from a much bigger base than the exports. I think the other two messages I wanted to say, despite the widening of the trade deficit, I think we look at the causes of this widening, or the causes of the higher growth of imports. And mainly this is driven by growth of imports of capital goods, which is a positive development. Normally shows investments happening in the economy. Capital goods grew by, importation of capital goods grew by 22.4%. The other driver of this growth of imports was intermediate goods. The capital goods grew by 17.8%, and the intermediate goods grew by 16%. So these intermediate goods, most of them are going to construction and manufacturing, which again, the two put together is a positive story to the economy that contributed to the good or the high performance of the economy we saw in the first slides. So while it's impacting on the widening of the trade deficit, but it is building a base for future good performance of the economy, or for a future healthier economy. And on exports, while it's growing by 3.8%, it's good to note that, good to note that we see traditional exports growing negatively, but this is outweighed by growth in the non-traditional exports, growing by 10.1%, and re-exports growing by 22.4%, despite the traditional exports growing by negative 15.9%. So the good story here is that we see our exports being diversified. Normally, we heavily relied on the traditional export, that's minerals, tea, and coffee, which used to contribute almost more than 60% of our exports. And today, this has gone down to below 30%. And so we see now the non-traditional exports linked to manufacturing, linked to the Made in Rwanda efforts, and the re-exports linked to positioning our economy as supplier of goods and services to the region, pulling up growth of our exports. So I think these are the main three stories we get from this slide. Now, on the monetary side, that is really our main focus as a central bank. As you know, we reduced our monetary policy stance, our central bank rate, from 5.5% to 5% last year, in May last year. And this was linked to very low inflationary pressures, low exchange rate pressures, and we wanted to see good growth of the credit to the private sector that could contribute to continued good economic performance. And would say, though it will not be easily directly linked to the good performances we've just seen, but this also contributed to the other monetary numbers we'll be showing you in the next slides. And the graph here, we are showing you how our monetary policy decision impacted on the short-term money market rates. Normally, the upper sort of yellow line, or I wonder whether it's yellow or orange, it's our upper band. Normally, we don't expect the money market rates to go beyond that band. That's 1% above the central bank rate, and wouldn't expect it to go below 2%. That's the lower band of the central bank rate. So the fact that the money market rates converged along our monetary policy rates, that shows it goes with the market, with economic fundamentals, and we're also seeing improved transmission mechanism that gives us confidence that we can really influence what is happening in the economy using the central bank policy rate. Now, on the This side, we show the performance of the lending rates and the deposit rates. This doesn't follow immediately or directly the decisions of the central bank, but we see also this happening with a very long time lag. When you look at the lending rates, reducing from around 13.3 in 2015 to 16.49 last year. So at least we've seen gradual, though slow, but at least there's that positive trend. Positive in a way from the audience's point of view, because people continue to always complain about high interest rates from the banks, but at least we see this going down. And this is linked to the good economic conditions we've had over the last almost 5 years, low inflation, good economic performance that is helping banks to increase their lending, and therefore, as they increase their lending, the economies of scale kick in, and they're able to lower their lending rates. Of course, us keeping the policy rate accommodative, that also discourages them to come to keep their money with us, and so that's a sign that we're encouraging them to lend more, and as they lend more, they're able to. This is able to impact on their lending rate. Again, when you look in your booklets, we showed the sectors that were main consumers of this increased lending, and here this slide really shows the performance of the banks in terms of increasing lending to the private sector. Maybe let me start with the new authorized loans increasing by 20.1%, and this was building on a very high base because we had, again, high growth of new authorized loans last year, and this year we saw banks, new authorized loans really hitting above the 1 trillion mark. And the most interesting thing here is to see the diversifications we are starting to see in the sectors where the banks are lending. Normally we were, and I think, I don't know if I have, we'll come to it on the financial stability side. We had over-reliance on real estate. I think the biggest chunk of loans from the banks were going to real estate and trade. And this last year, we saw good lending going to manufacturing and to public works and building. And this is, again, linked to the story we saw in the performance of the economy, the sectors that drove the economic performance. So, as I always say, the banks can benefit from the good performance of the economy, but they also contribute to the good performance of the economy. So it's a win-win. When you look at this slide plus the slides we saw on the economic performance, at least we see our financial sector really being linked to the trends we see in the real economy. And so the other deposit rates to the private sector, that's outstanding. They're all positive developments linked to the good story we saw in the economy, but also to other good stories we'll see when we reach the financial sector size. Now on inflation, which is our main focus as a central bank, last year we had, I would say again, mixed picture. We had very low inflation in the first 6 months of the year, and then started picking up in the second half of the year. But overall, the average inflation we had last year was 2.4%, which is still very low, but was coming from even a much lower level of 1.4% in 2018. And this increase of inflation in the second half of the year was mainly linked to food. When you look at the seasons we had or the weather conditions we had last year, we had challenges with food production in the second half of the year, and food inflation itself within the last quarter of last year increased by 20% from 3.2% we had in the quarter before. So this inflation we see, as we'll see again in the projection for 2020, is linked to this high increase in food prices towards the end of the year, but also coming from a very low base even the year before. So we have the issue of the food, but also we have that issue of base effect. And this drags the inflation remaining slightly high because of the base effect as well. Now, I think that's a summary of the economic performance in general. The other three parts I had talked of: the real sector, the external sector, and the monetary sector. Now, when we go to the financial stability as our second main mandate as a central bank, the first slide shows you the structure of the financial sector and its performance. Again, as you see, the good thing to note here that all the subsectors of the financial sector, which are the banks, microfinance institutions, insurance, and pension, they all registered a positive growth last year. And there's no big change in the structure of our financial sector. The banks still dominate with 65.9% of the sector, and followed by pension funds. And pension fund is mainly RSSB with that 17.8%. Then insurance follow. So overall performance of the financial sector last year, the assets grew by 13.2%. And this is linked to the good performance of the economy. As I said, they had good lending, they had capital injections, and we are happy that most of our financial institutions still retain their profits. We see little dividends being paid out, and that continues to support the growth of their assets and their capacity to continue supporting or lending to the private sector. This focusing specifically on the banking industry. As I had earlier said, I think the good story here is that we see reduction in the exposure on the real or the mortgage sector, because this was, as you see the graph, the bars in the middle, that is the mortgage sector, that was the main consumer of loans from the banks. At least this has had downward trend over the last 3 years. And if you remember in 2017, we had indicated that this was becoming risky, and therefore banks took that and they had to slowly reduce their exposure, which is, we think it's a good trend for the banks. Again, I said trade had been a main consumer of loans from the private sector, and we see that also reducing. And then transport and communication plus manufacturing received increases in terms of their share of the loans from the private sector. So this is positive. We see at least the concern we had on the concentration in one sector, we see this reducing, and we expect to see this trend continuing. This is again the structure of the banking industry. We see that the main assets of the banking industry is made up of loans and overdrafts, which is normally their main mandate anyway. They're supposed to be intermediators between the savers and borrowers, and I think they are doing a good job here with 57% of their assets in loans. Of course, we know this also remains the main contributor of their revenues, but we hope they can continue widening their revenue base, not to really entirely rely on loans. Wherever we have a challenge in terms of the quality of loans, you see banks suffering in terms of their revenue. So, and we see that also. We didn't put the details here, but you see it in the booklet. At least we see other channels or other sources of revenues coming in to diversify the source of revenue for the banks. Again, we see the main source of the financing of these assets of the banks is deposits from within the country. So domestic funding is the main source of funds for our banks. It is positive because that means they don't have big exposures to the rest of the world and limited exchange risk, but that limits their capacity, again, to grow their business. So while this is good, but I think they should be giving them a best to widen, again, their source of financing for them to be able to widen their financing to the private sector. Maybe the last part with the banks is now on our mandate, on the prudential requirements for the financial institutions, what we track to be sure when we tell you that the banks are stable, sound, and strong, we normally base on these two main factors. One is on the capital adequacy ratio of banks, the capitalization of banks, and we have a minimum that they want to go below, which is 15%. And as you can see, last year, in fact, this increased because some banks increased their capital, and so we see it standing at 24.1% on average for all the banks. But what I can assure you that none of the banks is below the prudential requirements. And in fact, wouldn't accept any of the banks to go below the prudential requirements. So we have a healthy banking industry, which is the same with liquidity. Again, we track the liquidity of the banks to see how they are positioned to meet demands from their clients in case their clients would want to withdraw their money. And so we look at these liquidity ratios. And as you can see, our minimum requirement is 100%, and the banks are much higher than what is required. And yes, I think this is the other sector that shows the health of the banking industry. One is on the quality of their loans. We've seen again the graph on the left-hand side of this slide shows how the NPL position has been improving over the last 3 years. I think from 2016, that's 2017. That's when we had, and if you remember 2017, the first quarter of 2017, we had the economy growing by 1.7%. And that impacted the quality of the loans in the banks, where we saw NPLs increasing to around 8.2%. So as I said earlier, the good performance of the economy has positive impact on the banking industry. So from then, we've seen healthy performance of the economy, and that has impacted positively on the performance of the bank. So this reduction in NPL is driven by three main things. One is, with the good performance of the economy, we see increased lending. Therefore, the best increases, automatically the ratio will improve. But also, we saw the upper part improving, one, by NPL in itself, the nominal NPLs reducing because some loans which were in NPLs improved to performing loans. But the other negative thing is that we see write-offs increasing every year. So we see banks writing off bad loans, and this has been increasing from around 25 billion, I think 4 years ago, and last year written off loans were around 50 billion. So that is negative. It's improving on this ratio, but it's negative. Though at the end of the day, it also improved. When you look at the revenues, I think recoveries has improved last year, so part of these NPLs have been recovered and has contributed to the good performance of the profitability we see here. When you look at the other graph, the profitability of the banks have been improving, and we just put here the return on equity, because this is what an investor will be looking at, or anybody outside Rwanda that would want to invest in Rwanda will be looking at the return on equity of our banks. So that's why we decided to put this instead of the nominal amounts. And we are happy that this has been improving over the last 3 years, and we expect this trend to continue. And this has improved despite the fact that we saw big increase of capital over the last 2 years. That means there's been really good performance in profitability. On the microfinance institutions, it's more or less the same story. We saw good performance in the assets of the microfinance institutions, their loans increasing and their deposits increasing. Here, this graph gives the subsectors of the microfinance institutions. We have the Murenge Sacco, the non-Murenge Saccos, and the limited MFIs. Again, the positive thing that all the subsectors of the microfinance institutions registered increase or good performance in their assets. And the graph here shows the soundiness. Again, we saw all of them meeting I think the upper part showed the profitability, which was positive. All MFIs registered a profit of 12 billion. Here, one to note is for Murenje Sacco, you see the increase from 2.8 to 4.3%, 4.3 billion. This is linked to the efforts by government institutions after the Mushikiran of 2018 that had decided to set up a committee that will support and help SACCOs to recover the NPLs. They did a good job. Out of 10 billion that were outstanding, they're able to recover more than 5 billion. And that contributed positively to the profitability of the Murenje SACCOs. But again, down is the prudential or financial stability indicators, the capital adequacy ratio, the liquidity ratio, and NPL. This is all positive, and therefore we can confirm that the microfinancial institution sector is also healthy and sound. On the insurance, this graph shows insurance in general. We saw that also increasing, and the general insurance accounting for 81%. So we see good performance again in the insurance sector, and this we had increases in motor insurance premium rates starting 2018. This has contributed positively to the performance of the private sector or the private insurance companies. It had some challenges, but as we explained before, if this didn't happen, we're having big challenges with the insurance sector companies. So the increase in the premiums of motor vehicle had really positive impact on the performance of this sector. And we saw also injection injection of capital in the insurance sector plus retained earnings, as I had said earlier. Here we focus on the private insurers, looking at the health of this sector. Again, here we look at the solvency margin as the capital indicator for their capital, strength of their capital. Our minimum is 100%, and as you see, overall they are at 170%. And the liquidity of 120, they're at 130%. Claims ratio, they are doing well, but we still have challenges with the expense ratio. And expense ratio, when you look at details of the performance of the insurance sector, it's mainly driven it's mainly affected by low revenues. Their revenue base is still very low, and therefore, when you compare that to the fixed costs they incur, it's still above our minimum requirement of 30%. But we see improvement here, and we continue to work with the insurance sector to improve on this. On the pension sector, I think we are used to the good performance of the big animal in the house, which is RSSB, with the always having improved assets year on year, and I want very much on that. I want to focus on the last two, the private pension schemes, which we started to register, I think, around 2018. That's when we had these registered. So at least we see their assets increasing year after year. That is from 35 billion to 45 billion, and we expect to continue seeing this growing. And Ejoheza is a new product that was introduced by government in 2018, trying to bring on board the excluded citizens from the RSSB, the pension fund that refocuses on salaried workers. While the amount is still low, 2.1 billion registered in the last 2 years, I think the number of subscribers so far is what gives confidence that this was a good project, or this is a good program. Already we have 244,000 registered members. Already it's half of what we have in RSSB that has been there for decades. So we hope with increased efforts, we'll see many more Rwandans being able to save for their future, for their pension. Now on the payment systems, I think the main message here is we continue to see digital payments increasing in our country. mainly driven by mobile financial products. On the left-hand side of this slide, we show the subscribers. These are active subscribers of mobile financial services and the number of transactions. Number of transactions increasing from 299 million or 300 million to 379 million. But I think my main message was on the type of transactions we see within these mobile financial services. Originally, we used to be dominated by just cash in and cash out, and we've been pushing to have this money used to transact instead of withdrawing it at agents. And so the graph before that is circled shows digital payments using mobile financial services, where we see people using these mobile financial services to pay for goods and services at merchants or to pay for utilities. And so this has been increasing, as you see, from 19.9% of the total mobile financial services to 24.2%. And we expect this to continue further because when you look at the POS is here that is contributing to this growth of mobile financial services used for purchase of goods and services, that what we call the modern POSs or the merchant numbers given by MTN. And so you see these increasing, just started in 2018, this new form of points of sale, and this increasing from 11,000 to 19,000 last year. We expect that this should be even increasing much more than this because it's just a number, so it's easy to deploy. And we expect this to be increasing and therefore would have a much bigger impact on the transactions using mobile money without having to withdraw resources. And when you look at the number of POSs per 100,000 of the adult population, which measure the penetration of POSs, and by extension measures how people are able to use mobile financial services. We originally had a target of reaching 62 POSs per 100,000 in 2019 because we were still relying on traditional POSs. And as you see, traditional POSs increased just from 2.8 to 3.4. But with the introduction of modern POSs that are virtual and easy to deploy, we see this increasing to 216. I think our target to 2024 was about 324. So we expect really to hit that before we reach 2024. Yeah, that's the target we have for that time. So as I conclude, on the outlook, one, on the financial stability side, we expect and we can confidently say that the financial sector will remain sound and stable. When we look at the fundamentals today, we have no worry that 2020 will have any problem except, I don't know, maybe something unusual happening. But for now, we are confident that this remains sound and stable. Then we, of course, will continue to ensure that the banks or the financial institutions hold enough capital relative to the risk they're taking. And that, number two, reassures number one. Then we continue improving our regulatory framework to strengthen the resilience of the financial sector. We've been really improving our regulatory framework to international standards, and this continues this year. Then on the insurance sector, the players there know that our focus this year will be the implementation of the risk-based capital that we've started working with the insurance players. Then the insurance sector again is moving from IFRS 4 to IFRS 17 as we know the banks move to IFRS 9, so the insurance sector is moving to IFRS 17, I think supposed to start in 2021. Yes, so we are working with the sector to prepare for that. Then on the payment side, as we had informed you earlier, we are upgrading our RIPS payment that is managed by the central bank, and we want this to be operational 24/7, that will improve on the clearing and settlement of of goods, but also with much improved security and operating hours. So we expect this maybe our to go live, soft live or soft launch is in March, and we expect by May all things to have been fully completed. Then, of course, we'll continue to enforce the security of payment products. On the domestic economy, we expect the economy to continue performing strongly this year. The current projection is 8.1%, and we want to maintain that until maybe by March. That's when we, if there's any change, that's when we can, the Minister of Finance will indicate if there's any new projection. And of course, we'll continue to conduct a prudent monetary policy. We see inflation to evolve around slightly above 5% this year in 2020 because of the other base effect, but also because of the food prices that started going up towards the end of last year. And though they're slightly maybe reducing because of the season A harvest this month, we expect this to remain high, and depreciation expected around 4.7% this year. As we had indicated earlier, the global economic performance and our projections, I think the risks that we all know, we have the issue of the coronavirus that we don't know where it's heading to date. There's China that they used to say when the US sneezes, the whole world sneezes. I think today when China sneezes, the entire world sneezes. So we don't know how far this sneezing they're experiencing today will go. And that, if it prolonged, it will affect the global economy in general. And that might impact on our economy as well in terms of exports, but also our imports. I think our imports, we import more than 20% from China. So if the problems continue, that might impact on our sources of imports. And then, as always, the Monetary Policy Committee is ready to take an appropriate action if anything happens that was not earlier projected. So this is a summary of what is in the booklet. I'm sure you get time to read the booklet, and we are here with my colleagues to interact with you. But even after this session, we are happy to continue receiving your questions or any need for clarification based on how you continue internalizing what you read from the booklets. Thank you.
Thank you, Honorable Governor, for your presentation. Just a few takeaways from the Governor's presentation this morning. We see that the global economy, as he has mentioned, is projected to pick up, but also with risks, including the coronavirus. Also, the Rwandan economy has recorded a high growth in the first 3 quarters of 2019 and foreseen to continue performing well. Inflation is projected to evolve slightly above the 5% in 2020. And lastly, the financial sector is expected to remain stable and sound. We are now moving into our next session, the Q&A session. Joining the governor, as he has mentioned, is the Deputy Governor of the National Bank of Rwanda, the Chief Economist, as well as the Executive Director of Financial Stability Statement. We'll be taking your questions. We have microphones in the room for those that have questions already. And also, just a reminder that we have Slido, which will help us keep interacting with you. We have questions already that are coming in. You can open your browser on your phone, on your mobile phone. Just go to slido.com and enter the event code. Our event code is U800. Once you enter that, you'll be able to send in your questions and also vote for the questions that are already there. I can see some of the questions that are already being asked, and we'll be able to answer as many as we can. Before we give out the microphones to different people who have questions, I would like to I have two questions. I'll take that advantage of having the microphone and ask two questions to the governor. Governor, from your presentation, we see that credit to private sector increased. Can we relate this to the accommodative monetary policy? And also my second question is, from your presentation, we see that there's a big increase in the mobile payment transactions. What are the future plans to keep this momentum, so that we can see more people having these transactions? After that, I think we'll open it up to the audience. Thank you.
Yeah, thank you, Bob. I think as said in the presentation, the increase in the credit to the private sector is influenced by different factors. Of course, the monetary policy stance is one of the factors that contribute to this. As I said, when we announce an accommodative monetary policy, normally we are sending a message to the banks that we encourage them to lend more, because when we reduce, that means the interest at which we take their money when we want to mop up is reduced, and therefore it's even before it impacts on the interest rate at which the banks lend, it impacts on the rates that they would get if they wanted to keep their money with us. But also when we reduce the policy rates, that determines also our monetary policy operations. Therefore, that indicates that we want to do a lot of mopping up linked to our monetary policy stance. Therefore, banks will be left with big liquidity, with lots of money that they can use to lend to the private sector. So yes, it has an impact through those channels and maybe several other channels. As I said earlier, the good performance of the economy in general had maybe a bigger impact on the increased credit to the private sector. The improved quality of loans in terms of the risks the banks see, that also influences the level of their lending. And yeah, mainly, so these are the three main maybe drivers, but there are many other factors that really contribute to the increase in the credit to the private sector, including the monetary policy stance of course. Now on the mobile payments, yes, we see really positive developments in this sphere, and I think what we are doing, working with the industry and the other stakeholders, that will have a very big impact on the development of digital payments in our country, is implementing an interoperability switch. I didn't have to come back to that in the presentation. We've been working on this. We hope that this year, before the end of this year, we should be having this switch up and running. We've had some challenges, but I think by the next maximum 2 months, we should be reaching a turning point. And so this is one of the key drivers of growth in digital payments that we expect to be implementing during the course of this year. Number two, as most of you were here, toward the end of last year, we launched the cashless campaign, trying to educate the population on the benefits of using non-cash means to transact. This was, it's running for the next, I think 3 months till June. So we expect this also to have a positive impact, and we've also seen the players in the industry marketing their products, introducing products that are much cheaper. As I said earlier, we saw merchant payments really increasing because of the virtual points of sale. It's not because it's just easier to deploy, but also cheaper to use, because the other traditional points of sale cost around 2.5% to the merchant, and this is at around 0.5%, and in fact, in some cases, they don't pay anything. So with new technologies, we expect the use of digital payments to really increase in the next medium term. Thank you.
Thank you, Honorable Governor. Now we want to open up to the audience. If you have any questions, you can raise up your hand and we'll take a couple of questions and then we can go over to Slido and see some of the questions that have been asked. All right, we have a question over there.
Good morning, everyone.
Morning.
My name is Kalisa Simon Peter from University of Kigali. My question goes to the governor and Mrs. Peace. My question is looking at, we see that the central bank is focusing on cashless economy, but we see that in the cashless economy, the research shows that the central bank influence on being the banker of the banks, it is, in the cashless economy, it diminishes. So how is the National Bank of Rwanda, as we are moving to cashless and we are campaigning more for cashless, how are you trying to prepare for this? Thank you very much.
Thank you. We have another question.
Thank you very much.
Your names and...
Thank you very much, Vincent Gassana, KT Press. The whole panel really. Governor mentioned the global outlook, the global economic outlook. Do you think that by now we should be seeing some kind of difference that is made by that from the AFCTA? Is anyone preparing for that, or is anybody putting that in their own projections? And if you are, what would you expect it to be? What kind of difference would you expect to be making as you go towards maybe 2020, 2021?
Thank you.
My name is Gassana. I'm from Forex, La Vita Forex. I'm the MD. My question goes to the governor. Governor said that the payment should be digital, and we are promoting cashless, but we have problem with some banks. There is a system of payment, bank to bank, RIPS, but sometimes bank takes long. It may take 1 day, 2 days, so it's so hard to work for us. Thank you.
Thank you. That's the next question.
Okay, thank you. Good morning. I'm Professor Tombola. I do appreciate this monetary policy and financial stability statement, as it provides the benchmarks comparing to the last one. The benchmarks are seen from the banking sector, the insurance, the pensions, even for the microfinance institutions. But the question is where the sector is not doing well as regard to the benchmark. There is nothing is seen of what the central bank will be doing to improve that state for the next time. I don't know if the question is made clear. Fine, let me repeat it. When I look at this statement, when it comes to the banking sector, the insurance sector, the pension and the microfinance institutions sector, the benchmarks are seen, they're there, which is very good comparing to the previous report which was presented here. But the question is, where we do not meet the benchmark, the report does not provide any strategy to meet the benchmark next year. Thank you.
Thank you. I think we can take those for now, and then we'll go over to Slido after. So, are you welcome,
thank you.
Governor?
I hope I understood the first question, because it's we talked of the central bank being the bank of the bankers, and maybe how we let me try to frame it, to phrase it the way I understood it. The central bank as Bank of Bankers, what are we doing to contribute to the cashless economy or the drive to cashless? I hope that was the question. Otherwise, if there is any angle, you can make it much clearer. But as I said, we as a central bank, as the Bank of Bankers and the Bank of Government, we've gone completely digital, 100% digital. We through our RIPS that I said, the payment system we run at the central bank, that banks use to deal with us, but also to deal among themselves, this is completely digital, no cash. But also the payments done by government institutions to their clients, it's also done online. No cash, no checks, no payment orders, everything is done online. So we have digitized all our operations as a central bank. But also again, as the regulator of the payment systems, we are contributing to the drive to education, not really as a regulator, let me say as a player in the payment systems. We are going beyond the regulatory work we are doing as a central bank because we contribute to education of the population, to understand the benefit of using non-cash means. We are a key player in trying to put up the enabling infrastructure, as I said, on the interoperability suite that we are working on. Also creating an environment that allows innovators to come up, to bring up new products within the fintech industry that will drive the cashless economy that we want to achieve. So I really hope I understood your question. So that's the answer I can give based on what I understood. Then on how the global challenges are impacting on CFTA, I think it's a good question. One would say maybe it's a blessing in disguise. I think we've discussed this with my colleagues at the continental level, or even our leaders. The presidents, when they really initiated this, and as you know, our president was really leading in this initiative, is to try and deal or reduce the impact we have when things go wrong elsewhere outside our continent. So there's, like today we are saying we are going to be suffering because China is having challenges. If we had bigger trading between ourselves, maybe the impact would be much less than we expect to have if this problem continues. So I think this is sort of even a factor that emphasizes the need to work together as Africans and to trade and remove all the barriers between ourselves. And as we start trading together, we are creating a market for manufacturing industries within our continent. So to me, I would only see it from that angle of strengthening the need to move faster into the CFTA. Maybe the last two questions should be answered by Peace. I think one is on the payments, the clearing for payment by banks, and then the next is on what we do to meet prudential requirements when one of the financial institutions don't do so.
Thank you, Governor. So the question on the delayed payments in the system, I think there is a common understanding that is a fact. And a number of things already that have been done to correct that is one, I believe it was early last year when we undertook the check truncation project. That was one project that really aimed to cut down on the amount of time that it was taking to process checks through the system. Number two is the ongoing RIPS upgrade, which is also supposed to increase the number of times that the clearing process happens. Currently, I believe that happens 2 times a day, and the RIPS upgrade is supposed to help in removing the limitation on the number of clearing sessions that are happening throughout the day, so that is happening 24/7. And again, I think one of the things that we look forward to as part of this monetary policy statement is what are those things that would be calling for a call to action, should I say, And if you would ask me, I think the RIPS upgrade is one of the things that we're looking, for close collaboration with the banks in terms of building the background infrastructure, the interfaces with the system, so that, as we're working on RIPS working 24/7, we're also ensuring that customers' money actually hits the bank accounts as it's being, through a straight-through processing on the banking side. So I do acknowledge that, yes, there's been challenges in that regard, but I think with the RIPS upgrade, that's one of the things that will be knocked out. The other thing is also working on our payment systems regulatory framework, where we're actually putting some sanctions to failure to actually settle customers' payments within, I believe, within 8 years, the transactions processing system is that you have a maximum of 2 hours within which transactions should be settled on the customer's side. So failure to do that, I think we've had a gap in our regulatory framework where there hasn't been strong sanctions in that regard. So I think the RIPS upgrade and the sanctioning process to make sure that customers' monies actually hit their accounts when they're supposed to is going to go a long way in enforcing that. The other question on strategies that we have in place for where there is non-compliance with prudential norms. I think we have maybe we haven't done a good job at communicating that, but we have a thorough supervisory framework that actually indicates what we do when, for example, a bank is not complying with the capital adequacy ratios or liquidity ratios. And there's a number of things that we do in that regard, including, a call for capitalization for the institution. There are instances where we will actually even limit the payment of dividends to shareholders until certain prudential benchmarks have been met. But then that's probably on the two strong prudential norms that we use, which is capital adequacy and liquidity. But then you have things, and maybe that's what you were referring to, when you have things like operating costs that are beyond control. Probably that's the one area that we've seen gaps in the past year. And those we have to work with the supervised institutions. Sometimes we've had to step in and put some limits to some expenses that we don't deem to be value additional to the institution. So there's a number of things that we do, and we work closely with the supervised institutions to make sure that they rectify any gaps that are identified.
Thank you, Peace. Would like to take some questions from Slido. If they can help us. You can keep voting for the questions and send in some of the questions that we have. I can see there are very many. There is one that that is on top, and it says coronavirus has already impacted the global market. Do you think the Rwandan GDP may be affected? And if yes, how is NBR planning to intervene? The second question is, if central bank is 5%, I think they really meant if the central bank rate is at 5%, why are bank loans still high, even when they have all necessary guarantees? Thank you. And we have also the third question, saying that the FRA depreciation from 4% to 4.9%, what is BNR doing together with government to ensure that the gap is being reduced and FRA depreciation will not keep going high? We have another one. Kanyaga says, what is your next strategy towards reducing the trade deficit? I think for now we can answer those. They'll keep coming in. You can keep sending in your questions and also voting for the questions that are already there. Then we can hand over to our panelists, and then we can see how many questions are. The first one talks about the coronavirus and its impact on the global market, and what the National Bank of Rwanda is, how it's planning to intervene, and yeah, what is its plan?
Okay, thank you. ngo turakomeza dusangire ijambo kuri panel. So I will request the Deputy Governor to handle the question on what we are doing or what government is doing to reduce the trade deficit. I think, Chief, the question on CBR and its link to the banking or to the lending interest rates, you handle that together with the depreciation. Maybe I should give you all the other questions, even the coronavirus. You've been quiet, so I wouldn't mind you answering all the three questions. We can chip in when necessary. Deputy Governor.
Thank you so much. Good morning, everyone. On the question of what government is doing to address the issue of trade deficit, it's been mentioned the reasons as to why our growth in exports has been rather moderate, and how imports have been increasing for good reasons, including really huge investments being direct to key services is key to support that strategy, my strategy of the government. There are other things being done, including how we can harness the local knowledge or the homegrown solutions. We are so happy to see that government has really taken bold steps towards commercialization of that knowledge that we are building as Rwandans. They have established a Rwanda Cooperation Initiative, and we think that that is going to be fetching some revenue in future. I believe what we have today is a structural issue, and it might stay for some years, but really definitely in the long run, we are seeing better perspectives. Maybe while I still have the floor, I could pick on one question that was asked. Maybe Bob has not yet reached at that, because the list is really very long. But there was someone who was a bit worried about the debt levels of the country, about the reserves, and it's like, are we really in good hands? Are we safe going forward? Yes, the answer is we are safe. We see that this government is among the governments on the African continent, if not in the world, that is really keeping discipline when it comes to debt sustainability. We are seeing real levels of debt as a percentage of GDP, both in net present value and future value, really very low, still, I think, below 40%. So that's to give comfort to whoever would really be thinking that maybe because of the aggressive targets in growth and all these issues we have mentioned, maybe that we are going to see some problems in future, just to give comfort on that.
Thank you so much, Deputy Governor.
Yeah, thank you. Let me start by this issue of coronavirus. I think it was clear in the presentation of Governor about possibility of having negative impact on the global economy due to this problem. And because we are an open economy, definitely we may be impacted, but this will depend on the magnitude of the problem. We hope that this will be managed soon. But the second aspect of the question is, suppose we are hit, what the central bank is planning to do. One, if we have any shock, not only the coronavirus, but any external shock, putting some pressures on the prices, on the exchange rate, we have different tools to be used in our monetary and exchange rate policy. If we need to play our role to reduce pressures on inflation, we can tighten the monetary policy stance, and also our intervention on forex market may produce some good results. But another very important strategy is this kind of shocks can't be managed by one institution. I think, as you know, we have a very strong way of coordinating our effort as an institution in charge of managing the economy. So this is another tool we have as a country to put together our strategies to deal with the impact of any external shock, including this coronavirus. The second question is about the depreciation of Rwandan franc. What are we doing to limit this depreciation? I think the presentation of governor was also clear. One, we still have deficit trade balance because of our imports increasing higher than the export. But more imports are for, let me say, industry sector, infrastructure, and the other sectors which are really contributing to high growth of GDP. So this means, yes, we are having more import this last years, but we are expecting that these different sectors will start producing more goods to satisfy the demand, the domestic demand, so we helping us to reduce import, but also to increase our export. That's very important because we have seen, for example, import for consumer goods declining for the last 3-4 years, which is a really very good development we are seeing. But also the different government programs like Made in Rwanda. I think numbers in the booklet are very clear when you just look on the structure of our export. Today, non-traditional exports are really increasing and with big share in total export. So we've seen, for example, some sectors like manufacturing sector, driving the economy, consuming more loan. This really is giving the hope in the future that we are going to have more product, reduce import, and increase export, and this will have definitely impact on exchange rate. But what is most important, again here, another aspect to my answer is, what is important is to have an exchange rate which is market-driven, which is in line with economic fundamentals, and that's the most important aspect when you are managing the economy. The last point is about lending rate and the central bank rates. As explained again by Governor during his presentation, we have maintained a central bank in a commodity monetary policy for the last 5 years, reducing our central bank from 6.5 to 6, 5.5, now to 5. And you have seen the lending rate reducing also, which is very, very important. And this is linked to the monetary policy stance, but to high performance of the economy with capacity of borrowers to pay back their loans. But we can't expect to have a reduction in the lending rate one-to-one to the central bank rate because we have other non-interest factors which are very important when banks are defining the lending rate. We have risk, we have the nature of loan, we have our savings, the level of our savings. So we have different elements which are beyond just the link between the central bank rate and the lending rate. But what is most important here is the trend we are seeing in lending rate for the last 3 years, reducing every year. Thank you.
Yeah, by the way, we have other government officials in the audience. We have CEOs of financial institutions. So we are not expecting questions only. Feel free to comment on any of the questions asked, or just any comment that will help the audience to better understand how the economy is doing and where we're heading. So please, we don't expect questions only. We expect comments as well.
All right, thank you, Governor. Please.
Thank you, Governor, for reminding us that we are here. And thank you, sir, again, for the near miracle you did on the SACCO's account, where there was a toxic account of 10 billion. You resuscitated it to life, you recovered 5 billion. Any idea what will happen to the balance? Then, again, the automation in the SACCOs, which is an effort, an initiative for prevention of these toxic accounts to happen again. Sometime on 30th July last year, in the Prime Minister's Accountability Forum, I said that it is dangerous to try and automate what we have failed to do manually. In so doing, you remember here I will not mention the numbers. You remember the losses that went into automation of these SACCOs via MENCOFIN, via RCA, via the Microfinance Support Center, that triangle. So, I think there is a problem of management at RCA vis-a-vis the very good policy governor you have around the SACCOs. It also goes to, maybe from your earlier experience, Governor, you remember what you used to call NBAs, non-budget agencies. The SACCOs become so sensitive because they have got some radiating impact on those non-budget agencies, namely in the health sector and education sector. So if these SACCOs and accountability, accounting and accountability in that sector is accounting and accountability is revamped, those NBAs could be helped, Governor. Allow me, Governor, say good morning to Chief Economist. The Chief Economist, sir, the cooperatives in Rwanda, they are estimated to be, at my estimate, they are estimated to be about 10,000 and more. But I think the governance issue is a problem. You remember how much employment they should be creating. But if they don't clear their own problems at governance, that the solution to create employment, household poverty reduction, domestic economy, there is a problem. As that vast economist, I don't know what ideas you have for us. But mainly, I get back, economist, to the RCA. RCA, wherever I know it, its core business should be to provide strategic management services to the cooperatives wherever they are. But I don't think the human capital at RCA really measures to that job. Maybe the chief economist and the company, you would help us. Honorable Governor, as far back, I think, as 2005, and coming down at near climax 2016, there was some idea to introduce a cooperative bank, whatever its characteristics are. I don't know what happened. Maybe it became irrelevant. But by 2016, somebody did suggest that it was nearly in the offing. Let me stop there, sir.
Thank you so much.
I think there are many questions. Let's handle them before we open it up to the audience. One, Auditor General, on the issue of recovery of the non-performing loans in the SACCOs. I think, as I said earlier, it was a decision from the Umushyikirano of 2018, and this was an effort of different government institutions led by the local government, and we participated as a central bank, but it's efforts from different government institutions. And we did appreciate this. The governors here, they know the role they played in trying to really support the recovery of these loans. We had two missions of this ad hoc committee that was supporting, and I think we should appreciate the 5 billion that was already recovered. So again, there are discussions among the government institutions that participated in this to see if there's need to have a third mission. And on top of this 5 billion, there are also commitments in writing from the defaulters that will continue to pay. So I don't want to comment on what happens with the 5 billion that remains to be recovered. The efforts will continue. And I think the commitment from the government is that we really have to follow whatever is recoverable should be recovered. And these efforts of combined efforts from different government institutions has really helped. Then on your question on automating what has failed to work manually, and I think maybe we shouldn't be bringing here institutions and rate how they are performing as such or vis-a-vis to the central bank. I think we've been working together, and we might have had challenges here and there, but I think there has been good efforts, combined efforts with different institutions. I think the hope that we have with automation today, with manual operations, some SACCO staff are able to falsify documents and falsify operations. And with automation, at least we have, we are sure that we can lock in safeguards that you can't just play around with systems. And also it's easy to track whatever is happening using an automated system that going through the manual, all the paperwork, a lot of paperwork that is there. But also linking, I think the ultimate aim is to link the SACCOs. I think the thinking that the SACCOs are there today, they are not sustainable in the long run. And there was a decision to link them at district level and form one big SACCO. You can't link the small SACCOs if they are not automated into one big SACCO, because they remain as branches of this big SACCO at the district level. Yes, there are issues in the automation process, but I think we are happy that today, again, working together between different institutions, at least we are able to have now a product up and running. We are in the testing phase. We are working with the 3 SACCOs already, and so far the product is promising. Led by the Minister of Finance and the RISA, the National Institute responsible for automation or for IT development within government, and the Minister of Commerce and us here. So we hope by March we should really finishing the testing phase and then start on rolling out this IT or this program, this solution. So yes, there has been issues, and I hope this time we are on the right track. And I really have confidence that with automation, we are able to reduce the issues that are in the SACCOs. And we can, again, now move on to the next level of consolidating them at a district level. Governance issues in the cooperatives. Okay, let me leave that to the chief economist, since that's the expected economic margin from there. So, yeah, on the idea of the cooperative bank, I think the proposal still on the table is that when the SACCOs are consolidated at district level, and now we have viable financial institutions, they would form a cooperative bank that could coordinate their operations. So that still stands, but it's still a long way, because I think the main focus today is automating the SACCOs as they are today, and stabilizing their operations, then consolidate them at district level. Then from there, we think of the cooperative bank. So maybe there's a comment I can make on what you said, Dr. General. If. Oh.
Chief was delegated upwards. On the question on the cooperatives, I think the way I understood it is like cooperatives normally are very important for the economy. It's a form of organization of economic activity that is inclusive, that creates jobs, that creates shared opportunities, and so on and so forth. And maybe the question was like, if through bad governance we are missing out on this opportunity, what else can be done? And I believe the cooperatives, in terms of government policy, they are really key. And you see the ministry in charge, the Ministry of Trade and Industry, in charge of cooperatives, also taking this seriously. And as far as what is being done, or what should be done, as far as we are concerned, it's really a form of private sector that is inclusive and creates jobs, creates economic opportunities, and so on and so forth. So that those issues should be really resolved, and all the efforts in terms of improving the governance of those cooperatives really, really strengthened. And what we have seen for the SACCOs, which are a form of cooperative dealing or selling financial services, is, yes, when governance is bad, it really destroys those opportunities. And we've seen the issues of lack of ownership in the membership, when members really don't own their cooperative. And that's where it should all start, in those General Assembly meetings. The members are the ones who elect the board into office. And they have also these committees that are in charge of surveillance and so on and so forth. But the gap has been in the level of ownership of the members that are not really strong enough to demand accountability. And in cooperatives where you have seen really members demanding accountability, we have seen really a lot of good news happening there. So yes, there are some cooperatives that are still challenged or struggling on that front, but there are also cooperatives that are really doing well. And we should all empower the members and really demand accountability wherever possible for this form of organization to deliver what it holds for the economy. I think that's it.
Yeah, all right. With your permission, Governor, we can take another round of questions, and then we'll go to Slido. And if we have any burning questions in the room, yes, there is. Speaker, yes.
Thank you very much, Governor, for the excellent presentation. I don't have questions. I wanted to offer a clarification on the relation between central bank rates and lending rates. I think this has been said before. Banks do not get their funding from the central bank. We get our funding from clients' deposits, which are sometimes very expensive to collect. And I think the call to cashless is going to reduce the cost of operations for bank and eventually have an impact also on lending rates. So the central bank rates will drive money market rates, as the governor said, and also the cost of borrowing for government, which has no impact at all on lending rates. So what we can tell clients is to play with competition, because it has been the main driver of the reduction of lending rates. So for good clients, only good clients, I think they should negotiate hard. Not bad clients, obviously. They should negotiate hard and get also quotes from other banks before they commit. So this is my first clarification. The other question on coronavirus is actually, I think, a serious matter for economy. As the governor said, we source 20% of our imports from China. China is basically the factory of the world. So I think we need to work with the private sector federation, various associations to find alternative sources for imports. Otherwise, many of our clients who are traders who are importing from China are going to be affected, and this will have ripple effects on the performance of banks, etc. So it's important that we work together to find alternatives, and if this persists, it can be indeed a very big problem for our economy. Thank you.
Thank you so much. We have a question next to Governor.
Thank you so much, Governor, for this session. I really want to come back to the concerns of the Auditor General when he raised the issues about the microfinances, MFs, specifically the SACCOs, when we are really discussing about their management. We are aware about the Rwanda cooperative agencies being responsible for capacity building, accountability, and following up. But again, on the ground, when you see the situation, there is really a gap, and we would want to know to what extent does BNL come in, or even local government. Yes, Rwanda cooperative agency is doing its part, but at the end of the day, when SACCO, one of the SACCOs fails to perform well, money is lost, then BNL comes in, is responsible for either compensation, following up, or even terminating the performance of that agency. Now, how do we increase that collaboration arrangement so that there is no gap at all? Since you are in charge of monitoring, you have that monitoring framework. And you know, some of these SACCOs, of course, the capacity is not there. And especially when they have the councils who actually don't know what to do. A lot of money is there. They don't perform well. Rwanda Cooperative Agency doing its part, but the institutional development, the capacity building, the training, the skill that is required on the ground is not there. At what point do the local government come in to do its part? So how do we establish that mechanism for the BNL to come in the monitoring framework, they doing its part, and even by extension the security organs, because they will be called for investigations when the money is lost. So there is that model that should be probably fit at some point. What are the standards? How do you go and find out and check for the standards? How do you regulate when actually there is almost one SACCO is almost running bankrupt? So there is still need for that relationship, and it have been reported in, for example, Southern Province, about 8 SACCOs actually have where money is lost, not because of security or anything, but because of maladministration mismanagement and, all that. So we are trying to see, and I'm seeking to understand how we should have that joint effort to make sure that we reduce or reduce the gap. Even if there is no automation going on, yes, it could be there, but at the end of the day, there is this management that we need to put in place to ensure we see that gap. So I was trying to also reinforce the concerns about the management of the SACCOs and the MFAs, microfinance institutions. Thank you.
Thank you so much. We have someone on this side of the room.
Okay, thank you, Governor. I'm Dr. Gistanabagabo from Adventist University of Central Africa. Banks are for financial intermediation. But from your presentation, Honorable Governor, we see banks shifting from that role in increasing their assets in government securities. For 1 year, they shifted from 8% to 10%. My question, what might have been the reasons? And if the trend continues to increase, what is the strategy to bring back banks to their role? Thank you.
Thank you so much. Yes, we have, okay, we have 1, 2, yeah, we'll take those and.
Thank you, Honorable Governor. I don't have any question, but I have a contribution.
Your name, please.
I'm Ezekiel. I'm the Vice Chancellor of ERK. Recently, I had the chance of visiting one of the developed country in Europe, this Germany, and I was able to visit one of the saving banks and ask them 3 questions. One was, how much is the interest rate that you charge to the borrowers? They said it's almost 0. I could not understand. How about NPA, no performing loan, is almost 0? I mean, I continue asking many questions. And then finally, there are 3 things that I have found. Most of the time when we're invited here, we ask questions, but we don't give a contribution. And I think the reason why Central Bank invites us is just to ask questions, but to see what are you doing also for the economic development of the country. 3 things that I found is that, number 1 is about savings. Children are being taught how to save from the beginning, 4 years, 5 years. This culture is there. So if as parent here, as CEOs where we are working, we have this culture of educating people how to save, the interest rate is going to come down. I think that's what I've found there. Number 2, I also asked some companies I visited about how they are absorbing the students from higher learning institutions. They said that these, our citizens, we give them chance for internship. Now, I'm happy that those people I see here, all of them are academicians, including you. So now, what are we doing for our students? Are we giving them chance to come and we give them chance to have internship? Are we giving them what we have to give them? I think there are so many questions we can answer ourselves. And this is my contribution. If we take it as a priority, not as a governor or anybody else, me as Ezekiel Sekibibi, what am I doing for my children? What am I doing with my students? Am I teaching them how to save? Am I teaching them how to save money, whatever? I think that's all I have to contribute. If we take it as a responsibility, not a responsibility for the governor. Thank you very much.
Thank you for your contribution. One more question.
Thank you. I can't keep silent, seeing what you were saying about agriculture. As you know, we talked about coronavirus.
Your names, please.
I'm Dr. Leticia Nyinamwiza from the Senate.
Thank you.
Agriculture is a big contributor to our economy. When we talk about coronavirus, we forget climate change, which is, again, a big challenge for our economy. How do you face this? How do you think this how can you think BNR can contribute to agriculture? When we see that fresh food scarcity is raising prices, and a big part of our population live of agriculture. Do we really observe this, or do we have some contribution? Sometimes we believe that agriculture product or crops need only rain, but they need water. We have to think about, and we always hear about irrigation project. What are we doing? Do we also inject some money, or do we have some strategies to increase agriculture product, including animal product? Do we have strategies to increase to face the climate change? Here I want to call upon your attention on climate change versus coronavirus, because climate change is affecting the whole world. Thank you.
Thank you so much. I think we can take those questions.
Okay, thank you. I think the question or the comment from Governor Gasana is, yes, we collaborate as government institutions, as I said. But of course, before collaboration, we have specific roles we have to play as, and I think one important thing to note here is that the improvement in our role as central bank and the role of RCA in dealing with the SACCOs. Originally, RCA was also playing the role of sort of a regulator in SACCOs, and we now agreed to leave that to the central bank to do the regulatory work and supervisory work with the SACCOs. And the RCA will help in capacity building and institutional development of the SACCOs as they do with other cooperatives. And so we coordinate as we, central bank and RCA, but also the local government, especially like we, as I said, the coordination in dealing with the defaulters. At the end of the day, this was a government program that was initiated to support rural development. And so from the development point of view, as one, mobilizing the population to work with the SACCOs, mobilizing the elected organs. I think you talked of the elected organs that don't have the capacity. This we are supposed to work with the RCA to support building capacity of the elected organs, but also the local government would really, or the local government official there would really support the elected organs to understand their responsibility, because they are there as representatives of the citizens, the owners of these SACCOs. And we work with the law enforcement agencies, like we work with police and RIB. In fact, with RIB, we've agreed on to give us per district contact person in cases fraud, in cases any problem in SACCO. We know who to contact and immediately work with them to follow up the culprits. So there is really collaboration between institutions, but we can do better. And I know we've been working with local authorities in education, in mobilization of the citizens, but also the leaders of the SACCOs. I think briefly that's what I can say in terms of the coordination, the roles of each government agency in supporting the SACCOs. And as I said, at the end of the day, if we are able to consolidate them into one big SACCO, that will be the solution. Today they are really scattered everywhere. They are small, and you don't have the capacity of the elected organs to understand most of some of the financial transactions done by the management of the SACCO. So there we work together. I think now the focus is try to consolidate them. Then they can be able to hire able managers. They can be able to have able boards of directors that oversee the operations. That's really where I see the solution to the weaknesses we see in some of the SACCOs today. Dr. Gisana Wagabo, I think I'll leave your question to Chief Economist. Dr. Ezekiel, thanks for your contribution. I think it's really advice that is good. And I don't have anything to add. I hope we all understand and take the advice. Honorable Leticia, yes, agriculture is key to the performance of this economy, or to the sustainability of the growth of the economy of this country. And I think your questions are twofold. One is what's being done to improve or to increase investment in agriculture. The Minister of Finance, Minister of Agriculture, and other partners are working on different efforts to de-risk agriculture. One is on, now they have introduced insurance in agriculture that can support to anchor the risks within agriculture, but there are also a lot of efforts on improving on irrigation, because today the biggest challenge the biggest challenge leading to less investment in agriculture or lending to agriculture by banks, because it's still highly risky. And again, the question you brought of climate change, maybe I didn't stress it, but it was in my slides, and it is clear in the booklet that climate change is another big challenge to global economic stability or economic growth. We have issues of floods across different countries. We have issues of wildfires. We have, I think, this locust that is a challenge that we have in the region. All these are risks to the stability and the performance of the global economy. So, as you've heard, there are efforts, one with the government already has efforts on to deal with the issue, for example, of locusts. We are still working with our colleagues in the region to see how it has impacted them, those that have already had the challenge. We want to understand how that has impacted on the economies, and we try to weigh how it might impact on us in case we are hit. But again, there are different efforts by government on climate resilience. As you know, our government, I think, is very vocal and pronounced on dealing with the climate challenges. And so there are different efforts that are there to try and mitigate the issues of climate. It's there, it's with us. But the good thing is we, as a country and as a government, we are big players in issues to do with climate change, domestically, but also on the global level. So I would say on the financing of agriculture, there are efforts there to try and de-risk the sector and improve on the financing. But again, there are efforts beyond what the central bank does to deal with issues of climate change. My colleagues can say more on that. Yes, I think that's what I wanted to say, Chief Economist.
Yeah, thank you, Governor. The question is about financial intermediaries by commercial banks and the capital market through the government bond. And the question is, the numbers as published in our booklet show that investment in government securities has been increasing. Is it a concern? The answer is no. The answer is no, because on one side, we need to have an economy with high capacity of financing itself from different sources. We used to have financial intermediaries or intermediation from the commercial banks. For the last 10 years, we are seeing the capital market also playing big role. The risk can be when we are seeing, for example, kind of crowding out the private sector. But as I said before, last year the new authorized loan by commercial bank to private sector increased by 20%, while we have also this increase in government securities. Second, as the central bank of Rwanda has been implementing an accommodative monetary policy, we've seen, for example, interest rate on government security reducing for all maturities. So these are indicators that really there is no conflict between investment in government security and the way commercial banks are financing the economy. Another element which is very important is that the money borrowed by the government is used to finance the economy, is reinjected in the economy the following day, the following weeks, and this is used by commercial banks to give loan to the private sector. This is a very good trend, and as I said before, we have different indicators used to monitor if any problem can happen from that kind of financial intermediation, which is not the case for us. There is another question, Governor, about I don't know if I have answered your question. Yeah, sure.
Maybe just to re-emphasize, if you look at the structure of the balance sheet of banks, lending already, like was shown also in the presentation, lending represents close to 60% of total assets of banks, and government securities is about 15%. So I think the issue of intermediation, the banks are actively playing in that space, just to emphasize.
There is a question about inflation coming from food and what the central bank can do. Yeah, on one side, this is called supply-driven inflation. There is no rain or bad rains. The monetary policy can't directly deal with that kind of inflation, but we normally take into consideration that element when we are forecasting inflation for the future, and when the central
was alternative to loans, and 16 is fostering collective investment schemes, especially high value added industries and service sectors. To my understanding is that when you look at the industrial development, and the key areas that we have highlighted is one is agro-processing, light manufacturing, and construction materials manufacturing also. But I understand that particularly projects in the agro-processing, commercial banks or financial institutions, most of the times are very hesitant, sometimes very hesitant to support or finance those projects. We have had, of course, BDF that has been, most of the times into these or helping these kind of companies. So the question is, how are you aligning these to resolutions? That one, thinking of going to equity funds instead of loans, and then thinking of high value added industries, particularly agro-processing, which commercial banks are sometimes, high risk, I would say. Thank you.
Thank you so much. Yes, we have a question in the back.
My name is Kananoa Louis Brown. I'm coming from UNILAC. So my question is on Brexit, specifically on UK. So as they are on a period of transition, their interest rate have rose from 0.5 to 0.75%. Historically, their interest rate is low, with a 2% targeted inflation showing a better than expected economic outcome. Looking on the exchange rate market, GBP has been depreciating on Euro and USD, meaning the British aggregate demand is in a decrease. So as Britain is a largest investor in the tea sector, British demand in the tea sector in Rwanda will surely decrease in the long run. If our rate is not decreased on a year, is not adjusted year on year, affecting our net export negatively. So addressing to the chief economics, how would you tackle this situation? And also looking to the global growth, which is on a decrease because of this fear of a recession. We would like to know how would you reassure that the business preference here in Rwanda will continue to be stable? Thank you.
Thank you so much. One last question.
Thank you. My name is Paul from Unimoney, a payment service provider. From the presentation, we've seen an upward improvement in the Leo sector estate, and from compliance, we regard Leo sector as a high-risk sector. However, the presentation has been silent on money laundering, and whichever factor which has attracted investors into that sector can at the same time attract money launderers into the same sector. So my question, what is the central bank is doing right now to make sure that money movement within that sector is in the right, is from the right sources? Thank you.
Thank you so much. We can take some questions from Slido. There are very many. We may not answer all of them, but we'll make sure that we try to answer as many as we can. The question that has been voted the most at the moment says, how will the Forex Bureau fit in the new model of cashless economy in Rwanda? The second says, could you explain the level of NPL in the mining sector? The third one says, Honorable Governor, of recent, Rwanda was rated B+ by S&P. What does this mean to our economy? And also, the next question says, please comment on how to finance the sustainable development goals. How will debt levels remain sustainable, and what are the implications for reserve levels? Yes, thank you so much. So these are the questions that we have on Slido. We'll keep answering some of them.
Okay, thank you. I really want to thank those who have sent questions on this app. Unfortunately, we won't be able to answer all of them. What we can promise is we can answer them on this app still, and so you can get the answers through the app after this session. Otherwise, we had planned to finish latest 11, and we're already 11, so we wouldn't want to keep you here much longer than we had promised. So on the questions asked, I think one is on the question of the commercial banks hesitant to finance private sector and linking that to the decisions of the last government retreat. I think I'll comment on that. Then the chief economist, you comment on the Brexit and its impact on the Rwandan economy or the overall global economy. A piece on money laundering, and it's linked to the real estate. Then we'll come back to the questions from the app. Now on commercial banks hesitant to lend, I wouldn't say really hesitant, but I think if you follow the discussions in the retreat, this particular decision is coming from the discussions around high interest rates from commercial banks. And the question was, I think the comment or the source of this resolution is that commercial banks, our financial sector is really not structured in a way that can support other forms of investments, especially startups and all that. So we expected that the introduction of the Kigali Financial Center will bring in new financial products that can help to add to what the commercial banks are doing today and finance especially the startups and the more risky projects. There are funds with capital that is able to take on more risky but highly rewarding projects that commercial banks might not be willing to take on, or there are projects, funds that are able to finance the startups that need cheaper capital and maybe more patient capital that commercial banks are not able to finance. So I think that's how this particular resolution came into the resolutions of the retreat. But I would request the commercial banks here to also comment on that. We have the chairman, Robin, and your two vice chairs. You decide how to comment on that. I think it's important that we hear from you as well on this question. Then, so Please, and Chief, you can respond to the other question from the audience before we move on to the side of question.
Yeah, thank you, Governor. About the impact of Brexit, the global economy and the domestic economy, I think the good answer is to say it will depend. It will depend because this is a very recent event. I know that all economies are adjusting to this new situation. The rest may be just a speculation or just giving general channels through which we can be impacted. But because it's very recent, I think let us wait probably a few months and we'll see how, on one side, the UK economy on one side is doing well, as you said, but with some decline in global, the aggregate demand. Other economies are now putting strategies together to deal with the new development. I think it's very area to really measure the impact of the Brexit. That's my answer.
With regard to anti-money laundering, this is a cross-cutting issue that involves different stakeholders. As a central bank, of course, we're working with the institutions that we supervise on the issues that pertain to the financial sector. But we're also part of a bigger forum that discusses anti-money laundering issues across sectors that is spearheaded by the Ministry of Finance. And this is a forum that brings together not just financial institutions, but also people that are in the real estate sector, brokers, real estate brokers, people in casinos, and all these other sectors through which laundered money could be channeled. So there's a number of issues that is going on to address the different gaps that have been assessed in anti-money laundering. I think the other major step that we've taken is, or as a country, is the establishment of an independent financial intelligence center. I believe that I can't remember if it's the law or the Prime Minister's order that actually establishes the center was recently gazetted. So that's also another significant step forward in addressing anti-money laundering issues in the country.
Yeah, thank you. I think on the questions from the app, I will handle one and then the Deputy Governor can handle the other two. The question on the meaning of Rwanda's rating by S&P, rated B+. I think the main consumers of this rating are the investors and the lenders to Rwanda. So this gives confidence to the prospective investor that want to invest in Rwanda that we are a stable and we're a stable economy that is worth to invest in. Also, if we went to borrow money from the market, this gives us the rating at which the investors or the lenders will be seeing us, and so the cost of our financing would be linked to this financing. And this is not just for the government, but also other economic players, the financial institutions, or any other investor in Rwanda that would want to borrow from outside. The first thing they look at is the sovereign rating of your country you come from, and therefore the assessment of who you are is linked to this. And so though we would be happy if we were AAA tomorrow, but I think as an emerging market, as where we are today, with B+, I think it's a positive rating that gives us a base to engage international investors and where we can source financing from the international markets. So.
Thank you. And the most popular question, how will the Forex bureaus fit in the new model of cashless economy in Rwanda? Forex bureaus are actually on the counter. That's the business model of a Forex bureau. And maybe what can be done is to try and see how at least we can have 50% of that on the counter than really without cash. Otherwise, if you need to buy or sell small amounts on the account, on the counter, it's almost inevitable to go cash. So the more we go cashless, the more we'll need to transact using our bank accounts, do the transfers and so on and so forth. Maybe. In some countries like in Sweden, it's very difficult to find really a point where you can even transact with cash, let alone exchanging it. So maybe the future is going there. But in the meantime, we still do need Forex Bureau services for really those small amounts. If you have a note of $100 and so on and so forth. But we are seeing also, and that's really the idea, is to see really the whole benefit of going 100% total cashless. But for the moment, we still see the presence of Forex bureaus. But probably in future, they might have to reconvert into other businesses. There was another question on the financing, the NPLs in the mining sector. Actually, this sector, as you have seen from the recent years, the international markets for these products have not really behaved very positively. Actually, to be frank with you, it has been very problematic for the people operating in this sector, which was not in the first place landed to anyway. But even we could see those who managed to secure loans really facing challenges from that perspective of international markets not behaving well. Probably that's the main reason leading to some deterioration in the performance of this sector. Eventually, when we go again through diversification and adding value and other byproducts in the value chain, we could maybe see this sector saved. In funding the SDGs, Sustainable Development Goals, frankly speaking, we don't expect government alone to finance the SDGs. Like our colleague from ULK was saying, there is a place for each and every one of us to contribute to the financing of SDGs. It's in health, it's in gender, it's in climate change, it's in education, and there is a big place for PPPs, partnerships between government and the private sector. And if government really has to borrow, yes, it will borrow. But as I mentioned earlier, there is a limit within which government is planning to do so, and carefully, so that the debt levels are sustainable. As we speak today, domestic borrowing is around 11%, and external borrowing around 30-something%, still below the benchmarks that really start to be worrisome. So we hope that with the partnerships and a bit of innovation, a bit of harnessing technology, maybe we are going to get this financing of SDGs through. Thank you.
Thank you so much, Deputy Governor. Thank you, everyone, for your comments, questions, suggestions that have brought us to an end to our session this morning. And before I conclude, I just want to remind you that you have 2 booklets in the file that you have, and also the Rwandan Banker that has different articles that you can read in your free time. And right now, allow me to invite the governor for his closing remarks.
Yeah, I just want once again thank you for accepting this invitation and for an interactive session we've had here. Our aim as a central bank is to communicate to as many economic players as possible, so that helps to understand our economy, where we're heading, where we're coming from, and helps you to make informed decisions as economic actors or key players of our economy. And at the end of the day, that supports the transmission of our monetary policy decisions. So once again, thank you. We'll see you again in August for another monetary policy and financial stability statement. Have a good day.
Thank you. Also, you're invited for